Can everyone see my screen, hear my voice, and all that good stuff? Hey, Steven. Yeah, we certainly are going to rock and roll. Hey, everybody. How we doing? Mike, Lou, rockin'. Patty, good to see you. Tim, Ray, Jen, Jim. So many people. I'm doing fantastic. Aaron, thank you for asking. Blurry? Is my screen blurry? It might just be the one slide the way it's scrunched up. Hey there, Ed. How you doing? Thank you, Robert. Appreciate that. I can't wait to give it. Okay, so let me dock these questions here, and then we'll get right into it. Bit of a ambulance going by, so I'll wait for that to Doppler its way past. All right, so I assume most of you were here last night. From last night, you know that. Actually, I'm going to wait till my slides actually show, so I'm not breaking up. All right, let's get this out of the way. You all know the disclaimer. You all hopefully know by now that nothing presented in this webinar is to be taken as trading advice, whether vocally or visually. You are expected to do your own work, to review it, to understand it as guidance, and go in and learn the hell out of the markets on your own. And, of course, please do not trade with any money that you cannot afford to lose, and don't take anybody's advice, especially your brokers. Just do the work, listen to the guidance, and be the market maker. All right. This is the swing trading, the seventh one and the final one, of course, in the BTMM style. What we're going to do is we're going to be wrapping it up. This is the final presentation, sad to say. But then again, I kind of need a break with all this. So much going on in the real non-trading world for me, and kind of getting towards the end of giving you a lot of material, and it's a lot to think about. There's a lot of homework that you guys got to do. But what I really didn't cover so far was really entries, and I want to touch again on the actual aspect of studying this stuff. So that's why I'm getting this out of the way tonight. And now I still will be a part of the Sunday study group, and you can see me there and ask questions there. But as for the DMR, this series of presentations, I am done. So let's get to it. Let's make it a hell of a final episode. All right, so we're going to be doing recap real quick, trade management. Then we're going to be talking about the importance of projections and, of course, study. This might be a long one, just like last night, but none of you are trading tomorrow anyway because it's non-farm, right? So it's no big deal to bet a little later. So the recap. So far we've covered the H4, and we looked at phases. We looked at the larger structures, okay? We wanted to see what the market is telling us on the H4 in regard to what phase it is, which is, the trend or range bound, because what is that going to do? That's going to lend us information that will help us to custom tailor our strategy, because they behave differently. If you're thinking in a strictly 3 up, 3 down kind of mentality and you're in a trend, you're going to get blown out because the resets just keep happening. So you have to know what kind of phase of the market that you're in. We discussed that via using the TDI and the moving averages to really hone in and go, aha, I know what they're doing, and using the quarter points to kind of identify where they're ranging back and forth. Seeing the larger structure and the different segments, using the TDI on your H4 to really hone in on where your extremes are and identify range or trend. We talked about what it looks like in each one. How to use the harmonics, just covered that a couple weeks ago, in the way that I use them, as far as keeping them on the chart and looking for a retest of that area, etc. Okay, so I believe that about covers it for the H4. All right, those are the most important things. So if there's anything I said in there that you're kind of left going, gee, I don't even remember that, unless you're new and this is your first one, you got to go back. You got to review this stuff. It's very important. This is where I start every single bit of analysis, H4. Steve never said H4, H1 is your roadmap just for his health. It's vitally important. All right, the H1, we covered the market maker cycle just last night in regards to how it lines up, that triple threat, that synergy of the larger structure, the segments of the larger structure, and the segments of the market maker cycle. You know, oh, this is the middle of the structure, plus it's a midweek reversal. This is the second leg, plus it's the false move week beginning, that kind of synergy, which the smaller you get with the larger structures, I refer to them as the 3x3s. Those are typically the 3x3s. They're going to be your resets. They're the ones that kind of trickle up. You see two levels, right, visually, but you know that 13 is taking its sweet time getting above the 50. That's what gets people kind of hung up. Oh, I thought it was in level 1, 13 cross 50, but there was two visual levels, and that's when it all of a sudden resets, and oh my goodness. And we really focused in on the confluences events at the areas of interest with the H1. I mean, all that stuff is present on the H4, but remember, the H4 is more of your guideline. That's setting your playing field. Like, okay, what kind of battle am I getting into? Then your H1 is more, you know, that's where you're really dialing in. And of course, the TDI aspect, everything is pre-fractal, so the same kind of stuff for the TDI really does apply on the H1. M15. And again, this is just a recap. I'm not looking at any of the questions right now, so I hope no one's going, wait a second. 2 minutes on the H1? No, this is just a recap. I've covered all this. Please go back and check it out. But I just want to get everybody, make sure everybody's on the same page. M15 I didn't cover, all right? There's plenty of other videos on that. There's plenty of other people that talk about that. But it's all applicable because why? It's fractal. It's funny how I can talk about a larger structure on the H4 and then one of the 1 minute fellas posts a trade with, you know, the, what do they call it, the microcycle in there, and it's like, wow, that's literally the same thing. You could take off all the indicators, take a snapshot of the microcycle, and put it next to a snapshot of one of my H4 larger cycle flashcards, and you wouldn't know the difference. It's really cool. So this, which boils down to this, really analyzed, and if anybody's looking at this going, what? It's all explained in the other videos, but this can be applied to your M15 as well. That's why I've consistently said all this stuff you can use for your intraday machinations, as it were, in order to grab the intraday stuff, whether you're doing 30 pips or whatever. But you want to start on the H4 and identify all the stuff we talked about. Dial down to the H1, see if you confirm. That, you know, when you get an H4 M formation, larger structure, second leg, divergence with baseline bounce, or maybe the baseline bounce is coming in and you're anticipating because you're projecting it and you've done the homework, like I said. Then you dial down to the H1 and you go, aha, this already shifted on the H1. There's a baseline bounce here too. I'm golden. Then you dial down to the M15. Oh my goodness, confirmed pattern. I'm in. This is just ridiculous. So again, synergy. Word of the week. Now I focused heavily on the TDI because the TDI alone, you can just look at the TDI alone, because sometimes the price is just ugly, and you can spot just based on the behavior, or the range-bound mode, right? What I talk about, and the same thing that Steve has talked about in the past in his boot camps, range-bound mode between the 40 and 60, market baseline shifting over the fixed 50 over and over. It's kind of straddling the fixed 50, but then you get in your trend mode, downtrend mode or uptrend mode, where the entirety of TDI shifts up over the fixed 50 or shifts down under the fixed 50. TDI can be instrumental in seeing your resets. When you look up and you see kind of a larger structure happening and it's getting towards what looks like to be the middle of the structure, you see 3 clear bursts up, but that TDI, it's just starting to slope over the fixed 50. Aha, reset mode. This is a potential reset. What else? Oh my goodness, hidden divergence. This is what Doug talked about for really being able to spot a potential reset in advance. I got everything lining up. Cool. And look at that. Trap move end of week. Awesome. But we also talked about chopstick divergence, my favorite, chopstick divergence with baseline bounce, and the momentum head and shoulders, which is just the head and shoulders that appears on the TDI, but price, you're looking at price, there's no head and shoulders there. Aha, it's down in the TDI. All this stuff very important. But now we got to get to entries and trade management, because that's the big thing. People always want to get to this, and that's understandable. obviously. But now you have the foundation, and hopefully everything I'm going to be talking about you understand. If not, mark up the tape. I think we started at 7:01. Look at your time, mark where that is, and then you'll know where to go back to. All right, I call this scaling and bailing. Scaling I refer to as getting in extra, and of course bailing, getting out. So first let's talk about the entries. Now this is going to be a lot simpler than many people expect, because there's not going to be really anything new. Now H4, can you enter on the H4? Only if you must, but you better know the hell out of your H4 chart and your cycles, or I'm sorry, your phases. You better know the hell out of what the TDI looks like and the price action looks like on the H4 that confirms, you know what, this is golden. You want to look for only the max confluence of events at the important AOIs. Now this is for everything. You need to be selective. I don't care if you're down in the 1 minute. You need to be selective at all times. But specifically, if you're going to be dealing with the H4 on a shift candle and you got a 75 pip stop, well, you'll see from doing the homework, sometimes those shift candles, oh boy, they look great. But if you really take a step back, well, they're not bouncing off of a confluence, an area of interest. They're not. There's no confluences. It's in the middle of a damn quarter point. It's a false inducement back into the range to hit the stops before they continue dropping or continue rising. So that's why I'm talking about second leg or second shoulder of your larger structure, shift candle plus bounce. That stuff's solid. You know, another example, at zone flip that happens to be at a quarter point. Then the 200 and 800 is intersecting with that quarter point for that moving average tug that I talk about. These are just two examples. There's more examples. Don't, you know, this isn't like, oh, Doug said this. To do the and really do it for yourself on the hard right edge. And we are gonna talk about that at the end, because that was a big turning point for me. That was very instrumental for me. And I did a lot of homework strictly on the H4, and I have talked about this before, where I would pretend, you know, not literally pretend I was on a desert island, but I said, hey, let's pretend we're on a desert island, and just for the sake of argument, we only have an H4 feed. We can only enter, buy, and sell on the H4. Imagine that. So that forced me to be patient, I'll tell you that much, and to really learn what is valid and what is not. When you do enter on the H4, more so than any other time, use a foot soldier and use a pullback pending. Don't swing your entire line on these H4 shifts. The H4 shifts, it's mainly there to guide you and confirm you. That's mainly the H4 is there to guide you and confirm you, okay? It is a last resort, and some of you will have to do the last resort. The big reason that I was brought in to talk about swing trading is because how many of you, have a 9 to 5? Okay, well, you could trade Asia. Well, not really, because I have my 9 to 5, and then I get home, and the wife or the husband I need to spend time with them. I need to spend time with the kids. So, sometimes you might miss something, and bam, oh, there's the H4. Look at that. It's so perfect. So it might be your last resort. So there's no point missing out on something if you've missed the H1 and the M15 entry if that H4 is screaming at you. But even then, you might consider avoiding any kind of H4 entries and just accepting, hey, you know what? I'll wait for the safety trade. I'll wait for the inevitable pullback, the pullback that's going to happen. 90% of the time, all right? So use it for projection, for establishing your playing field. That's really primarily, again, what you want to use the H4. H4 for, the 4-hour 4. That sounds so awkward. What phase, what part of the larger structure am I in? Is it a reset incoming? And is there a harmonic? That's primarily what you want to be looking at the H4 for. God, I hate that. Okay. After that, you then dial down, projection being the big part. Dial down to the H1. entering on the H1, I do this. I enter on the H1. People look at me like I'm crazy. I enter on the H1. I just did this, was it the beginning? Yeah, it was the beginning of this week. False move week beginning. Take a look at GA. I'm going to think that, yeah, false move week beginning on GA, H1, core to wood, blueberry. It looks to be the possible peak, the possible beginning of coming down to create a larger structure. Of course, they reset, and that's why I'm going to be talking about different areas to scale out. So you do lock in some profit because sometimes it just keeps going. But I enter on the H1, and something that Steve once said that keeps my mind at ease. And he had said at one point, if you're right, a stop doesn't matter. Do I not use a stop? No, I use a stop. But I've gotten to the point where I do 2 to 3 trades a week, sometimes one, sometimes none, if I don't see something so perfect. But anyway, I'm kind of getting off on a tangent there. Either way, it allows you to get in earlier than the H4. So it's much better than the H4 for any entries. And of course, once again, you want to focus on the maxes at the important AOIs. Second leg, second shoulder, shift candle, baseline bounce. Once again, solid. See, same thing. It's all fractal. It's ridiculous. And here, TDI is really your best friend because you have to identify those peaks, and you want to look for divergence for your peaks. That's your biggest indicator, is some form of divergence. And for resets, you want that hidden divergence that I talked about. If you can project this stuff out and start to see it coming, that's when you got them by the short and girlies. That's when you got them. And we're going to obviously talk about how to do so. Now the M15. I never talked about this, but I'm not really going to expand upon it other than to say follow the rules and the patterns that have already been laid out before you. Steve, the rest of the DMR, we got the 12s, the 22s. I don't need to add anything to that. And in fact, there's nothing that I do add to that. The only thing extra that I look for is bounce. Baseline bounce with chopstick divergence. Second leg, larger structure. Oh, okay, I'm in. Where do I sign? But the M15 obviously gives you tighter entries, more pips available, but sometimes that's not available to you. I already covered that, but it's necessary to talk about it again because some people get freaked out. We get a little angry email here and there, and I'll see something in the chat. Do you expect me to enter there? Well, no. If you're sitting in front of the chart, enter on the M15 or the M5, whatever your lower time frame is. But you still need to do your best entry on. You need to do your best to enter on the. There we go. You still need to do your best to enter on the lower time frame, whatever your lower time frame is. I really don't go below the M15. Once in a while, I peek at the M5 for what I look for in failed patterns. But whatever your lower time frame is, whatever your patterns are that you already know, that you flashcard, hopefully, then use those. But if you can't, well, we're going to be talking a little bit about pendings and looking at those areas where it's most likely to come back to, so you can potentially get the best entry. That through projection. So, pendings. That should be clear. So you have to know your direction when you're doing pendings. Absolutely have to know. Now, before we get to that, I always consistently talk about the one thing you need to know, the basis. The entire method is boiled down to what? Identify your peak and trade away from it 2 to 3 days. That's the boiled down foundational day 1, day 5, day forever rules of the game. Know your peak. The problem is most people are really struggling, how do I know? Is this a peak? Well, that tells me who studied peaks and who hasn't. If you're too busy flashcarding ID 50/50s before you know how to properly identify a peak, then you're doing it wrong. So you got to know your direction. If you haven't completed what's in front of you, 2 years worth of H1 levels, and I know most of you haven't, and yeah, I'm being a little harsh tonight. It's okay. I can take the heat. It's done out of love. You all know that. Most of you haven't, because I still, even though I made the offer for the H1 levels, I think I'm up to 38 people now out of all the students. So that just tells me some people, most people aren't doing the H1 levels. Now, if you're looking for pendings as well in order to do the swing stuff, I'd also say complete 2 years of H4 phase markup, minimum. Because once you do that and then you go down to the H1 levels and you start doing the H1 after the H4 phase markup, well, you start to really see it. Complete 2 years of TDI only markup. I cannot emphasize enough how awesome TDI is. You could just look at TDI alone if you studied enough and go, oh, yeah, there's going to be a larger structure in the price. It's really cool. I got a couple people, they've started doing that, and I'm like, wow, this is amazing. Done at least 1 full year of strict F12 shuffle. That's the bar-by-bar stuff that I talk about. I haven't touched too much on it in these swing presentations, but we're going to talk about that tonight. And practice scrimmages for 1 hour every day for a full month on H1 M15. Unless you have done all that, what's a scrimmage, Doug? We're going to talk about it. Without that, you have no business using pendings. Absolutely no business whatsoever using pendings. You have to know your direction. You have to know their behavior, where they're most likely to play, all that goodness. And I'm not saying this lightly. This isn't just like, yeah, it's just, okay, I'm going to say this, but if you want to, go ahead. No. So here are the prerequisites. You must be confident in your ability to identify your peaks. God, won't he shut up about this? No, I won't. It's foundational. You must be certain of your phase and know the tactics of how you're going to approach said phase. Trend different than range bound. Their behavior, you got to know that. Trader, know thyself. In the other night, just in the study group, posted a couple cool quotes about or from Sun Tzu, and they were very applicable to what we're talking about here. Got to know your phase. And you must be certain you're trading in line with the market maker trend at that point in time, which it's kind of point one revisited, but the subtleties are slightly different. So on top of that, when you're doing your F12 shuffles and your scrimmages, you must have practiced placing pendings on the hard right edge. It's a fantastic thing to do once you've done enough F12 shuffle and scrimmages and static homework. When you start to really see, wow, they always come back, flip the zone of the middle of the peak, the mid-strike, the nadir of the peak. They do a fake SW right there off the water, and then they stop dead at the middle of the structure, that nadir, and then they just drop from there, and wow, it's consistently right at a sweet spot. So I'm going to start practice putting my pendings right there. And you know what? I'm only going to do the pendings for level 1, which I'd recommend you stick with. So where do I look to place them? And before I open the questions, yes, we're going to charts. We are going to show this. I just want to get through it. The first obvious place is the place that we've learned about for quite some time, that Carr talks about a lot. After your shift as a retrace, whether it be the 4 hour, the 1 hour, the M15, using your ZRT, after that shift candle as a retrace. Clear zone flips. I like to put my pendings at zone flips. I am a big fan of these. Retest of the structure middle after the initial move. You get 3 levels rise. You get an intraday larger structure. It's a multi-session M formation. Hits the high in London. Hits the middle, forms out the nadir before going into New York. Hits the high again in New York. Drops down, full ADR, goes into the next day. Okay, I've already caught the peak because it was up at a quarter point and there was a whole bunch of confluences, but going into the next day, I'm tired, I want to go to bed, but it's an Asian pair, they might come back and hit it in Asia, so I look and I say, wow, the low, the middle of that M structure that just formed yesterday, that created my intraday peak, that might be the first leg of a larger structure, well, that nadir was at a 00 or a 50. It was at the sweet spot. Or, it was at a point. The 2 peaks were actually at the 50 sweet spot above the quarter point. Cool. Let me put a pending at that quarter point, because most likely they'll come back to flip that zone of anyone who took it short on the breakout past the nadir of the M. That's what I'm talking about, the retest of the structure middle after the initial move. Previously broken peaks, along with confluences. That's the most clear zone flips that people look for, okay? So trend is rolling down. You get a W formation that maybe lasts a couple weeks. And it's holding, turns out it's a reset. They drop another quarter point. Typically they'll come back up and they'll hit the bottom of that W. That's what most people see as the zone flips. They see those nice and clearly. I like those as long as there's confluence. And of course, when there's a confluence or a potential reset or a middle of the structure, when they're laying down the mat, that moving average tug, I like those as well. We'll look at some examples. Okay, before I go any further, let me just take a quick look at questions and let's see. Why do homework, flashcards, and must preparations to the general? The general who wins the battle makes many calculations in his temple before the battle is fought. The general who loses makes but few calculations beforehand. Thank you for throwing that quote in there, Stephen. You'll give me more H1 this weekend. Awesome. I look forward to it. This is my first time. Is there a special folder where we can access the previous sessions? Welcome, Emmanuel. Appreciate it. They are in the forum, in the DMR video section, or just the daily market review section. But there's a thread that's stuck up at the top that says swing presentations, a special guest presenter swing, or trading BTMM swing method. It has swing in there, I promise. Okay. Lou, how far above the zone flip do you set a pending? Does it depend? I put it, actually that's a good point. I totally forgot about that aspect. Thank you. I typically, my pendings, my take profits, okay, what I do is I do anywhere from 5 to 10 pips in front of the area I am targeting. Okay, think about that. Zone flip or take profit. 5 to 10 pips plus spread in front of the area that I am targeting. So let's think about that for a moment. Let's think in terms of a take. This is much simpler than that most people can wrap their heads around. I take an M formation, and I see that, okay, you know what, this M formation just occurred 75 pips above the quarter point. I got it 25 pips from the high. So my first scale out, my first take profit, I want to bang out at that quarter point because they might stop short of this quarter point and continue upwards. Don't forget, I just took a short off the M. So my first scale out to alleviate my fears and my worries and my panic is going to be at this quarter point, but they might stay off of that quarter point. They might not want to tap that. There might be a lot of trapped volume at that quarter point already going short. They don't want to release it. So typically, because of this, they can stay off of the quarter point by, say, 5 pips. But if you just go, oh, well, 5 pips, your take profit's not going to get hit. Why? Because the ask has to hit it. So that's why I will do 5 pips plus spread, or 10 pips plus spread depending on the pair. You have to do, there's certain things, I can tell you like, oh yeah, always do 10 pips, but then people are, oh, well, you know, this it constantly hits the area, so I'm missing out on 10 pips. Well, I don't know what to tell you. Aside from do homework, and you'll get used to seeing this stuff. And I promise we're going to get into it. It's really cool. And if you treat it like a game, you'll have fun with it. Okay, so I hope that cleared that up. Do the MM see the pendings? They see the pendings are part of the stops. Okay, so yes, they can see the bulk orders. They just know that their orders are there. But that's why I place their stops, because see, I use limits. I do not. Let's be clear about that as well. I do not use stop orders. I use limits. I do not use stop orders. I use limits. What's the difference? Stop order, and I covered this earlier in the first 2 videos, but I'll just briefly touch on it. Stop orders are what people use if they think a breakout is going to occur. So let's say the high of price is at Asia, it's at 125.00, okay? you think, oh, if it breaks 125, it's going to keep going. So you put a stop pending, what's called a stop order, at, say, 125.10. If it hits 125.10, your buy gets triggered, and it keeps going, and you're good. What I use is I use limits. I use limits. Why? We are fringe traders. We are looking for the stop hunts. The stop hunts, listen to that. They're not just hitting stop loss orders if anybody got it right. They are hitting stop pendings as well. Stop hunt. They're hitting the pendings that say, oh, if it goes here, it's going to keep going. So they're picking up the pendings, which are stop orders. So I want to put my limit orders, and the limit orders are the ones that say, if it hits here, I think it's going to stop here and go the other way. So I'm looking at the areas where stop hunts most likely occur, which includes the trapped volume, sweet spots, zone flips, the kind of stuff I'm talking about now. So just to be clear, it is limit orders. I never, ever, ever use stop orders. Somebody else might within the method. I just don't like it. So, if we're studiers, if we are adepts at studying the stop hunts, we are the fringe. We want to get in at the best order, so that's why I only use the limits. And I use the limits and my take profits 5 to 10 pips plus spread in front of the area where I think it's going to hit, just to make sure I get in. Okay. So, do you have a script for pendings? I do. I do, but I don't know if it would be good for the group. I have to talk with some people and see about things and see if we can set it up for the group. But I don't know. It's kind of like how Carr has that pending that he had developed for himself a while ago that automatically drops a pending when he opens an order, and so we'll look into that. We'll think about that. All right, so let's get back. Do you have a glossary for your abbreviations? I'm working on that, Leah. I know that's a point of frustration for a lot of people. Me and my damn abbreviations. I was about to say vibrations. I'm so tired. Okay, let's get back to it, everyone. Let me dock these questions. So scaling out. The question is why? Well, here's the main points. You want to book some profit. You want to increase your equity as you're going. Anything can happen, especially if you're getting level 3. Why? Because it can go both ways. News can happen. A world event can happen. So you want to book some profit. It took me a while to really get the hang of this, and I got the hang of it from doing a lot of the hard right edge training. But the biggest thing was the emotional aspect. And I know this better than anybody. Your brain starts going, oh, but why? Why do I got to take off 50% or 80%? Because if it goes 150 pips, well, now I'm only getting 20% on my... Shut up, brain. Look at the last 10 orders. How many hit break even? Forget about those. So you have to remember that, especially if you are struggling and you're trying to really, get your game rocking, you got to remember how many times you went to break even or how many times you got out because you got scared. Now think about going 150 pips when you previously only been taking 30. The best way to go about this, first of all, is practicing the hell out of this stuff on the hard right edge. You'll start to see they always go to the same spots that I'm going to be talking about. So between all that, that's the big why. And level 1 doesn't have to turn into 2 more levels. We talked about the larger structures and the 3x3s and the resets. You think level 1's turning into level 2, and I think level 2 is going into level 3, and all of a sudden it turns around. So, but you know what? Actually, the more you study, and you're able to spot these resets using all the synergy of the market maker cycle, the cycle segments, and the larger structure segments, you're going to be able to go, you know what? This ain't acting right, so I'm just going to get out, at this middle of the structure. It's going to go back up to this quarter point where the mayonnaise is coming over. There's a zone flip. It's easy. It's going right there. All right. But most importantly, it gives you the peace of mind. It relaxes you. Because if you're worried, all right, let's take, for example, you're a 30-pip trader. If you normally trade 1%. Maybe you up it to 1.5%, and you book 60%, 66. You book one third at 30% or 30 pips, and you let the rest run. You have now booked your normal line, and now the rest is just run. You can sleep. And speaking of which, actually, I'll get to it. Now, where are we going to be scaling out? Two major considerations are areas of interest and trapped volume. Now, trapped volume is an area of interest, but when I talk about the areas of interest, I want to categorize that as the stuff that's literally on your chart, that has been painted on your chart, the indicators and all that stuff. So quarter points and sweet spots. Scale out at those. At EMAs, the larger ones. Don't be scaling out at 13. So your 50, your 2, if it's far enough away from the 50, but mainly look for your 200, your 800s, your tracers, your Asian high and your Asian low. But also very important is your trapped volume, specifically your volume bodies. These are great. The middle, what did I talk about before? Not tonight. Earlier I was talking about the zone flips at the middle, but when I was talking about the larger structures, I talked about how your larger structures and your level 3s, the one that occur over a couple weeks, they typically, when you get a second leg that starts to work, you should be out by the middle. So you get an M formation over the course, or let's say a W formation over the course of 2 weeks. Second leg gets put in, midweek reversal on the second week, right? It starts rocketing it up. You want to be out by the time it reaches the middle of that larger structure, at least mostly. Why? Because the middle is a very prime area for them to stop and then come back. A reset doesn't just have to go first leg, middle structure, second leg, roll over. A structure, a larger structure, they can hit that middle again. The two prime areas for them to stop are of a large visible consolidation area of a larger structure. Think about this, visualize this. We're going to be looking at charts. I don't want to hear it, but think about this. If you can't visualize this stuff, somebody commented the other night, it's ridiculous listening to you rattle off this stuff because it's like, I can't believe how much you've internalized this method that you could just rattle through this stuff out. They were just blown away. That's the point you need to get to. So let's think about this for a second. You have first leg gets put in, potentially false move week beginning. It takes its time. It works its way up over the course of the week. It gives you a trap move on Friday. Start to form the first leg of the middle of the structure, which is going to be an inverse path structure that we're looking at. First leg got put in. It's a W, right? So we're looking for an M for middle of the structure. Closes, goes into consolidation on Friday for trap move end of week. We never got a midweek reversal. Going into Monday, however, we're expecting that false move week beginning to give us the second leg of that M, which is the middle of the structure. Heading back down, they hit that second leg of the larger structure on Wednesday. Now we get a midweek reversal. They come down in 2 bursts off of Monday. Bam, Monday. Close at the extreme of the structure for that day. We're not quite down back to the first leg that occurred on the Monday of the previous week. Going to consolidation, stop hunt high, drop for Tuesday. That drop gives us the second leg. We only got 2 drops, not 3. No big deal. Now, we get a shift off the second leg. I'm in a potential for where they may stop is that first area of consolidation that occurred on Monday going into Tuesday. That's the first area of consolidation, of the last visible consolidation area of the larger structure that occurred. So there's another area. You have to watch how it behaves. Now, I typically don't scale out there unless it's a big H4 larger structure, and the move back up into that area has given me at least 50 to 75 pips. Then I'll scale out of the area because they could just zone flip that area, and that's where they roll over. Don't forget they have to show that it is going up or it is going down. So they'll come down into that first or the last visible consolidation area that happened during the larger structure and just drop out of there or continue up out of there. But we'll get into that. I know if there's probably somebody going, well, slow down. Can you show us an example? Yes, I will. But first a note about volume bodies. I mentioned volume bodies. This seems to kind of confuse people. A volume body is the portion of the body of a trap candle where the body meets the pin. So pin equals trap volume, right? So oftentimes what they do is they stop right at the body so as to not release even a smidge of the the trap volume contained in that pin. This is what I mean. Volume body, volume body. Right there where the body meets the pin, where the pin is sticking out of the body. All this is trapped volume. So take for an example, this is Tuesday 1 week, and 2 weeks later, you got a nice peak formation, everything lines up, you take it short, and it's coming down into this area. This is one of the areas that you want to scale out. Doesn't mean they're not going to go into the pin, of course not. But a lot of times they will stop dead right here. So what I will do is I will place exit orders or manually scale out within a couple pips. I usually do 2 to 3 pips plus spread in front of the volume body, right where it meets. Same thing here. If I caught a long, I'm sorry. Yes, a long. If I caught a long off of some W formation and it's coming up, maybe going into level 2, I'm going to scale out. I'm going to put a partial take profit, 2 to 3 pips plus spread in front of this pin. Why? Is they'll come up, and Patty noticed this or asked me a couple weeks ago when I was talking about the larger structure, how they will stop at the last known consolidation area because they have to work that area. So they'll stop just before this big old pin on, and then they'll work it for like 4 or 5 hours. Back and forth, back and forth, back and forth. But me, now they may continue to go up, but I want to book, so I'm not sitting there through all that nonsense, letting my dummy brain convince me, oh, we should get out, despite the fact that all our projections show that it's going up. Now, I want to book some profit. That will, once again, what did I say before, that will calm me down and allow me to ride the rest of it out. Here's a different example. Still on the short side, but it's like a green hammer. You know, if you had a peak formation, you're coming down, you want to be scaling out somewhere around here. Or maybe you're all out, you know, maybe it's the final run. Same thing on a long, you're coming up and you're hitting this area that was the pin bar of a previous M formation on the way up. Now, how much? That's entirely up to you, all right? Mine changes based on how I feel about the current move. If I've done enough homework, I'm comfortable with the market. If I really feel strongly, I might scale out 30% and let the rest run. But I also know that I'm going to be sitting at a later point. So I might book 40%, 50%. Because you know what? Let me book more, up my equity more, and then I'll be able to have a slightly larger line to throw out when I purchase more. Okay, so you have to find your own pain point and eliminate it. It's up to you. I remember specifically when I first heard Jim talking about 80-20, and I kind of already covered that. That my brain started going, oh, 80-20. I think that's a very smart place to start because it allows you to book most of it and just be comfortable letting the 20% ride and kind of build up your confidence in your ability to project the larger term. So just you have to figure it out. And you can toy around with this by doing your F12 shuffle and your scrimmages, which we are getting to. Okay, but let's let Larry Libeskind have a word on this, okay? You remember Dixon G. Watt's story about the man who was so nervous that a friend asked him what was the matter? I can't sleep, answered the nervous one. Why not? Asked the friend. I'm carrying so much cotton, I can't sleep thinking about it. It's wearing me out. What can I do? Sell down to the sleeping point, answered the friend. So you got to ask yourself, what is your sleeping point when it comes to holding a trade for longer than a couple days? I mean, even just to the end of the day. You know, and as far as I know, Steve said, what's his sleeping point? There is none. He addressed this, I don't know, like 3 months ago or something in one of the charter schools, maybe 4 or 5 months ago. He said, people always ask him, like, well, if you can see this stuff, why don't you just hold? He said, it's not my bag. It's not in my personality. I don't like it. I can't do it. 50, I know how to grab 50. That's my thing. I like that. So if you want to use this stuff to just grab the bigger moves and just be out by the end of the day, that's fine. But some people are still uncomfortable with that because they're not sure. Now, the only thing that's really going to fix that is doing a copious amount of homework. But at the same time, when you're first starting off, start with the 80-20, like Jim recommends. He's got that partial close script. Now, in the U.S., for you folks using strictly U.S. brokers, screwed with the FIFO now as far as scaling in and out to a larger degree. If you're scaling in and you're trying to scale out your first position or your second, you want to let some of your first position run. It's ridiculous, but they won't let you do it anymore. And you can't have different take profits either. It's so beyond stupid. But some people are getting into some of the other brokers out there that are allowing U.S. Traders. Not really going to discuss that. Not my place, but there are places out there. All right, scaling in. I asked why before. Now the question is why not? Because if you have the right direction and you're gaining pips, you've done enough homework, you can reasonably project based on behavior that they're going to continue. You know what level you're in. So it's a no-brainer. If you truly have the peak, you've extended past the peak, closed at the extreme of the structure, the TDI is vectored past it looks like it's, you have everything lined up. Why not scale in? It's literally the same thing as missing the peak and just doing safety trades. So if you're getting a peak formation trade and you're holding it, then what's the next area? Safety trade, level 1. All right? So it is kind of a no-brainer. And it falls in line with the age-old adage, which does still ring true, to cut your losses early but let your winners ride, which is, most people do the opposite, the exact opposite, because they let that stupid hope into their brain interfere with their plans, if they're even so inclined to have plans. So this is something you got to get under your belt. Really, really absorb this. And there's another quote from that guy I want earlier. He said he always made his money not from thinking but from sitting. And he said, do you get that? Sit tight. Now he's talking about letting your winners ride, but also about waiting for the perfect setups. I always thought it was ridiculous. Like, Steve would say, 2 to 3 trades per week. Now I get it. I'm like, yeah, because the confidence of seeing these setups and going, dude, I know it's going to go. So much beats trying to hunt for stuff that you haven't quite got down yet. You can't identify it. It's just, that's really why I got into this, the whole swing thing. Is to really just let me master the peaks and just be confident. Okay, so where are we going to place them? Where are we going to scale in? Same places you always look for your standard entries. Keep the mindset of trading away from the peak. Level 1, potentially level 2 if it's nice clear. Those 23 trades are pretty cool. Know your areas where they're likely to pull back. And these are the same kind of areas where I talked about the pendings. Your trap volume, your volume bodies, your zone flips, your moving averages. This is really why Carr loves having step-by-step, okay, level 1 happens. What am I expecting in level 1? Okay, now we're in level 2. What can I expect in level 2? He's really got that down pat. So if you know your areas where they're most likely to pull back to and continue from, this is where, obviously you're going to be scaling in. It's basically the entire idea of what the entire DMR and Steve talks about. So you need to project out to the left, looking to the left, look to the right, and plan out your, do you see any confluence of events? That's where they're most likely going to occur. If you look at all pullbacks, all stop loss, all that kind of thing, if you look at your sweet spots and look to the left and look at trap volume, there's 90% of the time there's a confluence right there of all the stuff that I talk about. On top of that, use your alert boxes as they were intended. Most people have no clue. They're just, I don't know, can I do alerts? Can I do that? Alert boxes. Joe built some amazing alert boxes. I prefer them to the chin alerts because you don't have to just have this one alert sound. I made a bunch of alert sounds that I'm thinking about sharing. I said I was going to a while ago. I never got them uploaded. But, you can get creative with that. You can have two, multiple ones on there, and it's fun. But use them as they were intended. project out. When it hits that area, it plays you a little ditty, and then you look at your charts again. And, of course, use whatever style that you choose and enter on the confirmed patterns that you know. Okay, so the projecting and the check down. This is absolutely crucial. I know a lot of you do not do this. You must project. It's the entire business. Knowing where your peak is, that's number one. The likelihood of your next stop, hunt, or pullback area, that's what I just talked about. Knowing where they're most likely to hit. That's number two. Knowing where they're likely to go is number three. And I say arguably because there's a lot of, big-time traders, big names, and infamous people in the trading world. If you ever read, the Market Wizards, stuff like that, a lot of them love to use the little axiom of always know where you're going to get out before you get in. So that could be number two. Either way, projection is your battle plan. It's your strategy, and from your strategy comes your tactics. You cannot make a reasonable decision without knowing the facts beforehand and what the field you're playing on looks like. Think about it. You can't. And I know I see so many people. It drives me up a wall, but it also kind of saddens me. I see a lot of times people back and forth. Oh, is this level 2? Is this level 1? Gee, I don't know, which is perfectly fine because that's what the study group is there for. However, when the next words come out of their mouth, I deflate because I've seen people say that, well, just wait till Jim comes on. Car's up in 30 minutes, he'll tell us. And I see a lot of guessing, but I don't see a lot of, well, I do see a lot of actual effort and posting of the trades, but there are other people, okay, that just kind of I'll wait till the pre-market. So don't do that. All right. You need to know your own strategy. A man, woman, I'm thinking of a quote I once read, you have to have faith in your own decisions. Because if you get in when Jim Smith says get in, or John Smith, or Joe Blow, you got to get out when Joe Blow says get out. Because if you're getting in based on somebody else, how do you manage that? I can't imagine. So please, please project. Here's another thing. I love this. Of course, the same things happen in all speculative markets. The message of the tape is the same. That will be perfectly plain to anyone who will take the trouble to think. He will find if he asks himself questions and considers conditions that the answer will supply themselves directly. But people never take the trouble to ask questions, leave alone seeking answers. The average American is from Missouri everywhere, and all except when he goes to the broker and looks at the tape, whether it's stocks or commodities. The one game of all games that really requires study before making a play is the one he goes into without his usual highly intelligent preliminary and precautionary doubts. He will risk half his fortune in the market with less reflection than he devotes to the selection of a medium-priced automobile. Once again, from the same book, if you're going to be swinging, pick up Reminiscences of a Stock Operator. It's a fantastic book. I've read it a dozen times at least. It's full of wisdoms. But when I read this, the first couple times, I just kind of glanced over it. But recently I'm reading it again, and I was like, how true. And Steve always about this, if you're walking up to your charts, just sitting down and going, I think I'll trade an M or a W today, safety trade. No, don't. So project out and do it daily and weekly. The market maker cycle is vitally important. Hopefully I kind of revitalized the interest in that last night, I hope. Remember that synergy of the cycle segments along with the larger structure segments and how powerful they are when you combine with the confluences and the areas? All right, begin on the weekend and project out potential moves for the week, thinking in line of what I just said. And don't get overly worried about it. Sometimes it's just a mess and you're left clueless, but that's okay. And every day, at the end of the day, you've got to reassess your projections and adjust. I always tell myself, reevaluate, redraw, relax, all right? Because they're going to do what they want to do. You may have been wrong. You may, oh, crap, I didn't realize, yeah, there was this over there, and it looks like it's not a reset. They are going to reverse, but they just held for an extra couple days. It's okay, but you have to practice this stuff. So just remember that your projections are your potentials, potentials. They form the basis of your entire strategy. You have to know where the trap volume is, where they're likely to reject. That's the entirety of it. And the more you mark this stuff up, looking to the left and saying, oh, trap volume, there's a zone flip, you'll start to see they consistently all the time, they hit these areas over and over that have these confluences So I get a lot of people who say they're just not sure what to look for when projecting. So I know I just kind of blurred out a couple ones, but here's the basic the road map. Look to the left and identify your trapped volume. Draw a box out from that area. Look to the now and see where you're at in the cycle. Now look to the right, meaning look forward a couple days. You need, again, projection. We're trying to look forward and see where confluences may line up. Okay, we're coming up, okay, we've got a first leg of a potential larger structure, and this is occurring on Monday, false move week beginning. All right, that mayonnaise is crossed, so we're about 150 pips away from that quarter point. We just broke off from the previous P formation low that hung weeks. So this, okay, that mayonnaise is intersecting that quarter point, which is now at the bottom of the previous peak that turned into a reset. So we could be looking at a zone flip, midweek reversal. Cool. Let me project out there, make a note of it, and plan your trade. And then come back in a couple days. Wait for that middle of the structure, zone flip, come back for the second leg. You're golden. That's what I mean. Looking to the left, looking to the now, looking to the right to see if you can see any confluences that may be lining up. Now, real quick, let me just take a look at questions, and we're getting into the final module here, the self-study, and that's what I'm going to be talking about, the scrimmages and all that. So let me just take a look real quick. Wow, a lot of questions. I'm sorry, folks. Yep, relaxed, carefree state of mind. Ooh, we're getting on 8 o'clock. I should probably... I said it was going to be a little bit longer tonight. I hope you all understand. Exactly. Someone's saying they can't stress how important it is to experience the state of risk-free opportunity. Exactly. Peace of mind or peace of mind and a bit of both. Every portion of a trade that I take off bank as a winner will contribute to my belief that I'm a consistent winner. Great. Asian high. Yeah, you probably caught on because I said Asian high, Asian low, so that's what the AHAL was. I don't, Lou, not really. I don't focus too much myself personally with ADR until I get into range bound. I tend to forget it. See, here's the thing. It works. I forget to look at it. But just because I don't look at it doesn't mean it doesn't work. Like, if I decided to, from now on, start looking at ADR, it would turn out mostly like, oh, you know what? Look at that, 3 times ADR. There's so much other stuff that I look at that it's at a certain point it's like, okay, another confluence to me doesn't. It's like, whoa, what is that? So I kind of forget that it's there, honestly. But it does work. Okay, cool, Stephen. I'll try and get those up. Everyone says thank you to Joe for the alert box. Of course, it's fantastic. Okay, cool. It looks like I'm all caught up. A true page turner. Thanks. All right, real quick, let's get on to this, then we'll take a look inside the actual terminal. Let's move it along, little doggy. Did my screen freeze? Okay, no, there we go. All right, there is no way around it. I know it's painful, but all the successful students have done the homework. Now, I want you to take a look at this. Steve, the original, the master, top down, H4, H1, all that, top down. He likes P formation trades, safeties, M15 entries are his primary bread and butter. I do understand he's been getting in, you know, he alerted everybody to the ZRT, and I think he just had one. I haven't had time to watch it based on M1, so he's getting that stuff tighter. But he was always P formation and safeties. He loves them. Carr, H1, M15. Now I'm talking about entries. This is primarily where the entries are. All right, H1 and M15. He likes half bats, bounces, and he has the whole confirmed pattern thing. Jim, he's more across the board. He likes the M15, M1, M5 entries, loves the tea time. He grabs some of those high-low stuff that he does off the high-low drill, 50, 50, 50. I just call it 50 cubes. It's easier for me to type. Joe, I'm fairly certain he's more strictly M15. I know he likes to, you know, trade in line with what Steve originally taught. Likes to look at the confirmed M's and W's, like safeties. Me, H1 M15 entries. I use pendings, false patterns, harmonic second legs, peak formation traits. I'm all over the place with my different stuff. Amir, Ted, PK, what do they do? M1, M15, M1, M5, T-time. Oh, look at this. Look at the disparity between everybody. The diversity, actually, not the disparity. Look at the diversity, okay? Let's take another look. Looks at H4 to H1, nose peak, projects. Looks at the H4, H1, nose the peak, projects. Looks at H4. I don't need to continue. You can see, right? Now, I think the 1 minute guys, I'm not sure really if they look at the H4. I know one of them at one point, I forget who, said, no, they primarily look for the H1 peak. So I didn't want to put words in the mouth. Maybe they don't look at the H4, but I know they look at the higher time frame, H1. They know their peak. They project. Now, can anybody answer me, what is the one thing that binds us all? Someone just said greed. Interesting. I'll remember that. Okay. Some people are saying a different thing, pattern. Only one person got it right. Massive amounts of homework. That one thing. Right there. That's the one thing across the board. So with what I'm going to be just talking about right now, I invite you, hopefully, that at one point your name is going to be here. And for some reason, Steve dropped down there a little bit. That's funny. Okay, so what to do? What to do about nothing. Here's my recommendations. You must mix static and dynamic. Now, static I define as the levels and cards. Okay, make your own flashcards strictly of peaks. Now, I'm not even going to touch on the entry flashcards. You guys already know to do that. There's been tons of talk about doing that, using the WSM viewer, doing your own flashcards on the 15-minute entry, whatever you want to do, whatever you prefer, you got to do those. But if you're doing those and you're still like, I don't know how to identify the peak, make your own flashcards strictly of peaks. Learn what a peak looks like as opposed to, well, potential level 3 because I counted and this and this and it. To study the peak, see visually, bam, this is what a decent peak looks like. Also study the weekly cycle. And, excuse me, this is, I mean, I've been talking about different things that you can apply to M15 minute. See, I'm getting really tired. All this stuff you can apply to the M15, but right here, this is really my recommendation for if you want to nail down the swing stuff. If you really want to nail down the higher time frame and being able to project any which way, and with fair amount of accuracy, be able to project out like an entire week, study the weekly cycle. Make flashcard series of 1 week at a time. But I mean like a series of the entire week. So like one flashcard of each flashcard set of each day. Monday, unmarked. Monday, marked. Tuesday, unmarked. Tuesday, marked, etc. Now, dynamic is the F12 shuffle and the scrimmages. But a brief note on the flashcards. Please study them. And be consistent with this. I would much rather you all do 5 flashcards per day and then study for 10 minutes, 20 minutes every day, all the previous flashcards. I would much rather you do that than what I consistently see. Oh yeah, I'm really going to get to the flashcards this week. This weekend I'm really going to dive into the Why don't you just do it now instead of stop talking on Skype? Or instead of talking on Skype, just stop. Just go do your flashcards. That's it. Do 5, cool. Do 5 the next day, awesome. Before you know it, you have consistency. That's way more important. So you start busting this stuff out, I did 100 flashcards yesterday. That's fantastic. And I bet you won't do them tomorrow. That's, unless you're Jim, then you're going to do 100 flashcards every day. But most people burn themselves out by trying to do way too much. I stress consistency. Less is more a lot of the times, as long as you're being consistent. The more you do it, the more fun it becomes, And then that's when you bump yourself up to doing an hour a day or 2 hours a day or whatever. You know, Carr has talked about this, how he'll just come home and he'll do homework for a couple hours a day. Just listen and throw on some music and just mark up levels. It's fun for him. It's relaxing. All right, the F12 shuffle. This is, of course, I have to be quirky with all the stuff that I do, and I have to name it. So this is simply going back into history and going bar by bar, making your projections, making fake entries with projected take profits and stop losses, manage your trades, and this is where you get to practice putting in pendings and scaling and bailing, record your results. And by that I mean take a screenshot of everything. I don't mean every bar. That's not what I mean. But when you get to a spot in the chart that goes, aha, I think this is going to happen. Cool, take a screenshot. I'm going to show you what to do with it, but then you'll analyze. You'll actually write out, type out, not literally write, but type out, okay, this is what I'm seeing, this is what I expect. Then you go back to your terminal and you move forward. And then you repeat, okay, cool. An entry comes up. Everything lines up. It's at a confluence. You see the baseline bounce. You see your shift candle. You dial down to your 15. Cool. Screenshot. Put it into your document. Analyze. So it did this, and I entered here. I put my take profit over here. This and that. And you're going to do this over and over. It becomes fun. At first, you got to get used to the process, but it does become fun, I promise you. It's a game changer for a lot of people who actually kind of get used to the process, and then they start doing it, because they make it a game. That's what I want you to do. Make this a game. Keep a record of your wins, your losses, and everything. That's the idea here. And make it a goal to beat your own record while you beat the market makers. Now, the tools I want to point out is you can use either your strategy tester, and I want to shout out a big thank you to Joe for showing the other night that you could use F12 with strategy tester on pause. I thought that was amazing. I'm glad I didn't know about that, though, because I probably never would have built the Hard Right Edge trainer for the homework helper. But if you have the homework helper, you can use the Hard Right Edge trainer. The benefit there over the strategy tester is that you can change time frames. You can be going bar by bar on your H1 and then go, ooh, this looks good. Let me dial down to the M15 and tighten up my entry. But I started this kind of training with Marta back in the day, back last year with the Swing Club, with nothing but just the regular chart on the Hard Right Edge. Okay, so your next tool is going to be OneNote. You're going to use this for screen clipping and recording your entries, observation, analysis, and projections. Download OneNote. I don't care if you have Windows 10 and, ooh, it came with OneNote. That's a piece of garbage. Don't use it. Download from OneNote.com/download the OneNote 2016. It's free. It's amazing. Evernote sucks compared to OneNote, believe me. All right, I'm not even looking at the questions right now. I know there's an Evernote fanboy in there somewhere. I'm sure it's good for certain things, but for this, OneNote trumps everything. It comes with its own built-in screen clipping tool that automatically allows you to send whatever screen clipping you are doing to OneNote directly. I'm going to show you in a second. Now again, once you import that screenshot into OneNote, you're going to type stuff out. And I'm going to show you the exact format that I use. And I also use, I entered at this price and scale out here and yada yada. If you want, I don't particularly use the Excel, but if you really want to keep a clean record of your results, make a spreadsheet and record all your transactions. And I want you to think about profit, loss, spread, and commissions. Now, well, how the hell do I know what the spread is? And if I'm doing this F12 shuffle nonsense on the EU in 2013, well, just average it. Let's just say one pip for the majors, 3 pips for the main crosses like EJ, EC, and stuff like that, and then 5 to 7 spread. Just whatever your platform uses, just look at that. If you're doing GA, go to your platform and say, hey, what is that? What's my spread on that typically? Cool. 5 pips, all right. I'll pretend I have a 5 pip spread whenever I take an entry. Why? Because when you start loading up, let me tell you, when you start loading up, all of a sudden, the spread and the commissions that you weren't really paying attention to, they start to matter. They start all of a sudden, whoa, how How, I'm down? How am I down $300? Oh, that's right, the commission and the spread. That adds up quickly. Now, what is a scrimmage? It's similar to the F12, but across all pairs that you like for 1 week at a time. So, for example, you'll take GU, project for 1 week, go bar by bar, and do your F12 shuffle, starting on Monday, right? So you do your F12 type of fake entries and all that. You record your results just like the F12. And when you get to the end of the week, you're going to go back to the start of the week and now do that same week, but for Aussie or EU or whatever. You're going to go through the line. Continue till you've done all the pairs that you typically watch. Now, if you're a nut job that watches every single pair, just practice the majors or just pick a couple pairs. Also, don't overburden yourself with this. Try it just with 2 pairs at first, just to get a feel for it. Now, what are the advantages of the scrimmage and the F12 shuffle? This is going to give you weeks and months worth of trading experience and of time. You literally can just go through and, okay, I got my, okay, that's peak and this the baseline bounce. This, you get to take your trades. You get to literally, the step after all the training that we have is demo, and the demo, the difficulty with demo is you're forced to sit there through all that time waiting and waiting and waiting, and time leads to us forgetting our last mistakes, because I know most people don't keep track of their actual trades, doing a trade journal like I recommend. So this gives you immediate feedback that's really quick, so you can course correct, and it develops self-awareness. Okay, so just think about it. You're going through a week bar by bar. You get to the end of the week and you take a look at your OneNote page and you go, wow, I made 10 entries, lost on 8 of them, and what the hell? Okay, you know what? Let me take a look at this. I'm getting in too soon. On this one, I didn't wait. There was no confirmation. I don't know what the hell I was thinking on that one. This next one, I was actually right, but I got in right before the U.S. session switchover. I'm not going to tell Doug about that one because I know I'm going to hear it. On this one, I made this mistake. On these two, I did rather well. What do you know? They both have baseline bounces. Aha, cool. A week's worth of trading in about 30 minutes of feedback. I mean, I can't express the advantage of that. It gets you in the habit of projecting, first and foremost. And, of course, it creates consistency. If you do this every day, if you just do a little bit every day and treat it as a game, you're going to have fun with it. It's going to create the consistency of that projection because you're going to be doing it every day. Then when you sit in front of your terminal, it's going to just, oh, I haven't projected. I need to do that. All right? And it gives you confidence in what you know you see. Go back to those 10 trades that you just blew 8 on. The 2 worked out. They were both confirmed patterns, had baseline bounces. Cool. You know what? I see those. That's everybody. How do I know what my signature trade is? I'll tell you what. Go bar by bar for a month or so. You're going to learn really damn quickly what your signature trades are because you're going to have the results right in front of your face. Wow, I suck at this, and I'm good at this. And it also really develops patience. It really does, because by the end of the week that you just did the F12, or you just did like 5 months of F12, or you just did 2 scrimmages where you went through a bunch of pairs in the single week, you're going to see those 8 trades that you blew and those 2 trades that you were successful on, and then you're going to see another successful trade on another pair with 3 bad trades. Then you're going to see 5 bad trades on the third pair with 2 good trades, and you're going to look and you're going to go, wow, I just had 7 good trades across 3 pairs across the week, but I gave all that money back, and they're all the same kind of. If I just wait, man, if I just wait and obey these rules, like all 7 of these trades, 6 out of 7 have the same exact thing. So I'm really good at seeing that. If I just wait for this, the money's going to come. Especially if you're doing this on the H4. I do recommend taking some of this and just doing it on the H4. Remember I talked about pretending like you're on a desert island? Okay. So let's take a look at what I mean. let's move this over here. All right, so I'm just going to be using, all right, while this starts up, take a look at some questions. This is similar to the trading game, which was very important to me. Yes, the trading game, which Joe told me about a long time ago. Yeah, I've heard people ask about the trading game. I don't know enough about it. I think that was first brought out before I came back to the DMR, and I haven't heard much mention about it lately or in the past year or so. So before we continue, or at the end, before we finish up, I'll ask Joe if he wants to. Yeah, I know it's just I don't know the rules. I don't recall seeing the video on it or whatnot, so I don't want to speak ignorantly about it and say anything about it. All I know is that I don't know too much about it. Okay, so not too many questions. I'll leave it at that. So primarily, what did I say? First, static homework. Take, for example, right here. And I'm just going to change that to the normal rectangle. Okay, we can see we got a P formation. This is important. You have to do static homework. But don't just go, I mean, the foundation of the first step is, okay, let me do levels. But beyond that, mark up your levels. Mark up what you see. Like, okay, I see consolidation area. Then I see another consolidation area. Would this be a big consolidation? I don't know. Here's another one. All right, I see this as potentially a peak. Move this over here. Okay, potentially. Now, take a moment and take a step back. What do I see? Okay, well, this looks like kind of one of those larger structures. It didn't really come down to the first leg, but let's see. All right, we get trap move into weak. It's kind of, I don't know, that's not really a false move. I guess it's a false move weak again. You have to work through this kind of stuff after you draw. Just don't just go, oh, peak, level 1, level 2, is this level 3, and this the peak, and this where's my reset? Don't just try and do that. Like, look at the moves that they do. This is precisely what I talk about with that bursty behavior. This is that crap that tells me, yeah, you know what, we're going into level 1, and that's good for a rise back up to the mayonnaise, but I see these pins. Let me look a little bit further back. Oh, what do you know? Up working into this last failed peak area. Cool. I might, after I see this and it rise back up, because this didn't come down into the first area, the first leg, I'm expecting a larger structure. Hell, I might put a pending up here in this trap volume area. What's that? 5 to 10 pips away from the area I want to put the pending. There's a confluence right there, isn't there? Blueberry, sweet spot. Okay, I might put a pending there, but then again, it's also Friday. I might just wait and consider aggression on Friday to a previous area of trap volume is typically indicative of trap move end of week, right? But get a little ahead of myself. To do with your static homework, because you have to take a look at this stuff and go, all right, shifted away, how do I know, where might I take a look? Here's a W, but is there anything else that's going on at this W? Is this just a W off the mayonnaise? Well, no, what do I see? This is a clear indication, a break here, right? They broke this area right here, so I'll just draw this out. They broke this area right there, and then I will change that color so it's a little bit easier to see for you guys. So now I'm starting to say, okay, you know what? They created a false M formation right here. They hit any of the stops of the people that went break even, thinking that this was the first pullback, and now they're going up, or maybe this was the first pullback. Cool, this is the new level. Let's move our stops to break even of the break here. Plus, we got a sweet spot. So I see a bunch of confluences in this area. That's what I'm going to be looking at. I see a bunch of confluences in this area. So we have our larger structure as our peak. It didn't quite give the beautiful second leg, but, you know, burst up on Wednesday, midweek reversal. We have clear levels. Stuff's crossing over. Cool. Going into projection, what might I look? Where might the stop hunt be? Enough homework, I might look at this and go, all right, well, my stop hunt could be at this quarter point to flip this zone. If it hits there, it might go long. Where's the next area? Well, if they really want to screw people, they're going to bust through all these moving averages that are now crossing over. Why? Look how many people started going long here, moving average crossover. I talked about this a couple weeks ago. When the moving averages start to cross over, that's when you'll initially get your big pullback. Why? Because all the robots and everything start going long, or in this indication, in this example. Look where it crossed over. Bam, cool, people are going long, robots. Nope, thank you, stop, son. Stuff starts to get crossed over, cool. That initial one, stop. There, oh, now we have momentum, stop. To be able to, I didn't mean to do that. No, I think my control key is still stuck down. So this is what the benefit of doing the static homework will help you. It'll start to do the static homework and then to stop and just look at the damn thing and say, where did they come back to? Where did they hit? Where are they going to? Why did they stop here? Why did they stop right there? Well, what do you know? In place people got shrewd attempting to go back long. People, oh my, the price is up. Look, it's bouncing off of here. They're going up. Here's the last area where you can see people said, oh, pins, I'm going up. Where they stop? Dead. Right at this area. And sorry if I'm moving and my voice is cutting out. But right at that area, at a sweet spot, 00, 131. This is the kind of stuff you want to look for. They hover around. They jerk around. They go up. Now, let's say you get here. This is what I'm talking about, and I'll end on this. Because another thing is I'm going to be going in depth on how to do the F12 shuffle and the scrimmages in the Sunday study group, because as much as I'm done with the DMR doing the special presentations, I'm still going to be doing the Sunday study group every other week until the end of the year. So I'm going to be covering this in depth in there for more detail. So if you're not part of the study group, I do urge you to join the study group. I can only imagine the amount of people that have left already that will never hear that. So this is what I'm talking about. We're looking at this. Say this is our starting point. We just choose this as our starting point. We go bar by bar. Now let's say we take a look at this and we go, all right, what's our day? Friday. There's our trap move end of week. This could be the peak formation. I'm not going to do anything now because it's the end of the week and I don't really like holding over the weekend, but I have it noted. Also, here's trap volume up here. I'm just going to draw a little box out there to extend, and notice you can draw past this area on the hard right edge if you have that hard right edge trainer. And then I go bar by bar. Now, first what I'll do, though, is I have my OneNote here. I'll just make a new page, a random page. So what I'll do, oops, I'll take a screenshot of this. I'll go back to my OneNote and I paste it in there. Oh my goodness, now I have it in there. You can resize it, but for right now, in the spirit of not having enough time and running out of time, poor Joe, I will do something like this, analysis. Trap move end of week at confluences, blah, blah, etc. Okay. And then what I will do is I will type expectations. Trap to end the week, potential, false move, week beginning, second leg, drop. As an example, I'll show you some more examples just in a second. Okay, then I go back and I go, I did it again. I go bar by bar. End of the week, I might take another screenshot. Now I'm projecting out into this week. Okay, what could potentially happen? We have three clears levels up. This is starting to look like an intraday peak formation, although it's not my cup of tea. I might be looking for a false move week beginning with a baseline bounce. Let's see what happens. I take a screenshot. I write all that stuff down. go in here. They don't have to come all the way up the way they shifted down. Maybe I'm looking for something right here. RSI is coming towards the market baseline, potential baseline bounce. Right, what I like. Shift. This is starting to look like a continuation. So maybe I take a screenshot right there. We're back over. We're not getting the baseline bounce. I move forward. Now also, as a matter of continuity, I will mark out the previous areas that they could zone flip, that they could come down and hit to. Why? If I take something short off of here, if this shifts down and I take a short, what did I talk about potentially scaling out? Or where did I talk about areas to potentially scale out? Confluences, isn't the moving average crossing over that sweet spot? Isn't that the top of the zone flip? So if I were to see a shift right now and start to take it, I'm going to scale out around here and then let the rest run. Now, it might reject off of here, be a reset, and continue up, but that's just the nature of the game. Every swing you decide to take isn't going to last 2 or 3 days or 5 days. Really something that I'm looking at. Why? I have this projected out. Notice, let me zoom in a little bit. I outlined the trap volume. This is how I like to project. I want to outline the trap volume. We see burst, 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 pinning the top of there, not closing above, and then we get a shift. Now, let's pretend I did that. What I'm going to do is I'm going to draw an entry right here. And then I'm going to say, well, I projected out from over here. And I know it gets a little bit confusing with all these lines. You do it how you want. You don't have to do it exactly how I want or how I do it. So I see this and I go, all right, you know what? Let me take a short right here. Oops. I marked these off as red. And then I project out and I say, okay, you know what? Let me scale out, and I'm going to do my little scale outs here, which I like to do as gold. So I look and I say, I know that a lot of times they could fail at the middle. We have a middle, which is at a day tracer, which is at a sweet spot. So let me scale a little bit out here. It doesn't matter. Big deal. Oh, it's 35 pips, it's 40 pips. I don't care. Now, where's my next area of interest? See, this is an area, I should have marked this up. This is an area of potential interest. Where else? Oh. And I'm going to place it in front of that area because I want to do a couple pips plus the spread. So my next area that I want to see is right around here. Now, it was initially, oh, the mayonnaise is crossing this sweet spot. That's my zone flip. Well, now it's moved up. So potentially in front of the sweet spot, but a little bit past the mayonnaise. It's at the zone flip. Nah, maybe I'll put it up here. It's a thought process you have to go through when you're first learning this stuff. That's what I want you to think about. So then you take this screenshot. You go and you put it back into here, underneath all this stuff, because this is your next action that you're taking. So you put that in there, and then once again you type analysis, et cetera, expectations. If you make an entry, I like to add entry, and then based on whether you screw up, you projected wrong, your take profit got hit, or whatever, I will do lesson. Now, that's a brief rundown, but I will show you, for example, what it looks like on some of the completed stuff from back in the days of the swing club. This is what I'm talking about. I would start. I have all my stuff marked out. And this, do you see? This is when I never had the hard right edge trainer, so we used the little hard right edge. So I don't want to hear any excuses. So this is for like once I was done with this one screenshot. Does anybody over here notice this scroll bar? various notebooks filled with this stuff. This is the Swingers notebook that we put together, and it's now defunct, but there's still some stuff that are, that's in there, left over from those days. So take a look at this. This is what I expect. You want to be successful in this business. You have to put in the work and worth the effort to go and practice entering. They just want to come to the terminal, sit down, potentially do a demo, but I want to enter now. And that's just screwing yourself over if you're doing that. So I'm going to end it here. It's 8:30. But like I said, I'm going to talk more about that in the Sunday study group. But I want to take a moment to look over some of the questions because I'm sure plenty of people left at 8:30. So, Doug, your voice is fading out. Oh, that was 8 minutes ago. Sorry. Yeah, I realized that when I slide my screen, I know. I'm sorry about that. I completely forgot. I've been doing good up until now, right? You're very welcome, Kelly. You're welcome. Tim, I appreciate that. You're very welcome. Glenn, you madman, you caps lock monster, you. I appreciate it. Thank you very much. Someone's asking where they can get the homework helper. You get the homework helper by sending in homework. Let me do this for you real quickly right here. Homework helper equals free. Cost equals 1 year worth of H1 levels. All right, now let me reduce this question pane right now. You will send it to send your levels to btmstudygroup@gmail.com. You will in turn get a link to the homework helper. Once you get that link, you always have me on speed dial to help you out with anything with the homework helper. I'm very invested in making sure it's helping people and people are using it. Thank you very much, Paul. I appreciate that. Are there directions to use the alert box? Joe?
Yeah, there certainly are. There's a video that's with the original installer. I'll have to find it. Leah, just shoot me an email on that, and I'll track it down for you.
Thank you much, Lee. OneNote 2010 and OneNote with Office 365. 2010 and the OneNote you get with Office 365, that's what I have. I have the Office 365. If you don't subscribe to Office 365, again, OneNote 2016 is free. You just have to go to the website and download it. It's for those that don't have it. That's cool that you do, though, George. Looking forward to reviewing the other videos. Good. Yeah, take them slowly. Watch this stuff over and over, but don't binge this stuff. I see all the time. People, I just got done watching the 4-day course and plus the boot camp, and now I'm going to go watch all the gyms and cars video. Slow is fast. Slow is fast. Going fast is just a dead-end road. Absorb the hell out of the basic material and the boot camp stuff. I promise you, it's the key. It's the key to the kingdom. But take your time to. Once you've watched it a couple times, go back and just, you know what, I'm going to take 1 week to watch this video, and every time he covers a very salient point, I'm going to go homework it for the rest of the day. And I'm not going to start the video to the next day. That's the way you need to approach this stuff. And do tons of homework. You're going to get more out of doing, a week's worth of homework, sitting there, 1 hour a day, doing that for a week, than you will from never doing homework and watching the videos 10 times. I promise you. I'm not trying to be hyperbolic here. It's just, okay. How do I get the Hardware Edge Trainer? That's part of the Homework Helper, which is listed right there. Homework Helper is a program I wrote. It's free, except for the one ancillary cost of sending me 1 year worth of H1 levels. So, sorry for my lack of knowledge. Hardware Edge, is it another program I need? It's part of the Homework Helper. But again, I started doing this stuff without the Hardware Edge. You don't, without my Homework Helper. My Homework Helper was just, it was very basic. It didn't have that Hardware Edge. I started literally, I'll show you. Without the Homework Helper, you just have to, well, first of all, you're going to get rid of this stuff. BPCT, delete. Okay, cool. Now you have a hard right edge. Look at that. So I see this. Oh, it broke up. That failed. I would have wrote how it failed, and oh, we got a continuation. Cool. Once again on Thursday, potentially, let's see. I'll draw this rectangle. The only thing is you can't draw your rectangle past the hard right edge. So you have to draw it a bit to the left and then move it over for your projection. So now I look. I go, oh, well, it's Thursday. Possible midweek reversal. I have divergence. You know, I check other stuff. I take a screenshot. And you go bar by bar. Now, without the home, the bar by bar is the F12 key. That's how you do it. It's really as simple as that. You just have to be willing to get used to the process. At first, it's going to suck. You're going to hate it because you realize how bad you are at it. But you have to muscle through that. And I promise you the rewards lie within Xanadu, and you will reach the end of the rainbow and blah, blah, blah. Okay. So that's all. That's all for the evening. I just did want to say, as my parting message, first of all, I want to thank you very much. Joe, always been instrumental in helping me get along with this stuff, works a lot with me on communicating what I'm going to be going over so they can appropriately address it for the emails and everything. Of course, he's here every Wednesday to suffer through my long-winded rants. I'm sure he's gritting his teeth right now. But, Joe, I know you're listening. I appreciate it. I want to thank Steve, of course, for giving me the opportunity and, of course, the knowledge that he has given me. I truly understand it now as a gift. Of course, it's a gift with conditions, that conditions being you need to put in the work. But if you do, I said it before, but the keys to the kingdom are there. That's what I get very frustrated with you people, but I hope you understand it's out of concern. Do you realize that the gift that you're given to truly understand how the professionals trade and how the market works? And Steve's given that to you, and I hope he sees it. The ones that aren't seizing it, I hope you do it with just dedication, discipline, and passion, because your future is anything you want to make of it, and it's right here for you. It's lying in front of your feet. You just got to bend over and pick it up. Okay, so thank you to Steve for that gift and allowing me to do this. Thank you to Carr, the rest of the DMR fellas. It's been a blast. Hopefully, maybe one day in the future I'll come back and do some more. But again, you can still see me in the BTMM study group. So I will see you guys on Sunday. Thank you so much for listening. I appreciate all the kind words, and you all have a wonderful night.